Okay guys, welcome to the bonus content for you. It's an additional content that gives you an added value for you in terms of trading. Now this is a bank nifty strategy and this is not for beginners. This is solely for those who are already trading on market, especially options. Okay. We all know that bank nifty got weekly expiry, right? And that being said, we can try to sell options, allowing time decay factor to work in our favor. Okay. You must have heard selling options are high risk. I agree to all those, but when you take it carefully, you can generate good consistent money all week. Now this is a basic chart of time versus price when time decay is considered. An option premium valued at maybe rupees 80 at the beginning of week will end up in zero at expiry day if price has not come near your strike price. Okay, if this is the scenario, we can take advantage and we can identify we can limit the loss on selling options by selling two legs on both sides. One is a call option and another is a put option, and definitely the current price will be between these two strike prices. Now to identify strike prices, we will be using with respect to support and resistance, okay, or framework that we learned. When two legs are combined, we are safe without huge risk. We can trade this intraday as well or positional starting from every Monday, as Thursday is your expiry day. Now consider this scenario when current market price is rising towards the call option. Your value of call option will increase, agreed, but look into put option. It would have substantial reduction, so much of its value in which you wouldn't have much to worry about. Now say price wants to go down, your put option will increase its value, but call option will have a substantial cut down as well. But when nearing expiry, even the slightest increase will again cut down, moving back to zero if current market price is below the strike price, meaning you can be profitable on both sides of legs. Now say what if price just stayed in between your legs ranging around? Guess what? It's two laddu with one gulp. You get to eat both side profit on expiry day. See? So let's open up the bank nifty chart over here, and we don't need these stuff. Okay, let me remove all of this. No more indicators on this. I don't need any sort of indicators. So this is your bank nifty chart. First thing first, let me mark the Thursdays first. This is Friday, Thursday. Okay, 1 2 3 4 5. I guess this is a Thursday. What is it? 28. 28, is it Thursday? Yeah. 1 2 3 4 5. 1 2 3 4 5. 1 2 3 4 5. 1 2 3 4 5. See, whatever I have marked are Thursday, the expiry day. Alright. What happens on expiry day? Let me open NSE as well. Option chain. Okay. Not Nifty. We will be choosing Bank Nifty. And the upcoming expiry is 12th, which is on next Thursday over here. Okay, so that means this is your middle price, and you all know that this is at the money strike price, right? And on your left hand side this is call option, on your right hand side it's put options. We have in the money, out of the money for put options, in the money call options, and out of money put options, sorry, call options. Beginners, I'm sure you wouldn't understand a thing that I'm saying, but still you should watch this so that you get to know what the terms are. I'm not going to teach you options because this course is not about options. It's just a mere bonus content for those existing traders. All right, so what we should do is, first thing, open our chart. Let me close these things, we don't need any of these. Inside bars we looked up on, right? This one. Okay, let me just save the scan as well. Inside bar, it's long. Yeah, inside bar long. Oh, anyhow, doesn't matter, leave it. What I'm gonna do, first thing first, suppose say you see this is the Thursday that recently happened, but this is Wednesday, Tuesday, Monday. You can start to trade from Monday onwards, expiry scenario, and I'm strictly talking about intraday as of now. Let me draw the first thing, the framework. Am I drawing right? Isn't it correct? Monday it opened here. We had a kinda inside bar. I don't know whether the criteria is meeting. Definitely it's lower low and inside bar. I don't know the MACD. So this is not about inside bar anyhow. It's purely based on support and resistance. Okay. When I see, I don't have a screenshot that happened over here. When I checked over here on a Monday, it was like, okay, let me first go with the strike price, choosing of strike price. Draw the support and resistance. Now from market, you know that bulls have gone like this and they are weakening. You know that part, right? From this, you drew your nearest resistance, and you can also plot this one too, these two. Okay, this is your first set of framework. Okay, if price breaks out, this will be your next set of framework. If price breaks down, this will be your next set of framework. Or you can consider this mega framework as well if you want to, but I usually consider the nearest framework, as in these two. What you have to do is you have to sell a call option and a put option. Call option strike price has to be above the current price. This was current price and I chose call option because I wanted a price above this resistance, which is 26,800, and I went for a put option sell. I didn't do it, but I'm telling you, I don't have a screenshot yet because I didn't think of it, and I had this one of 26,000 and 26,100. Okay, this premium of starting from here, it started around over here. I started checking from Monday onwards. Oh sorry, this is Monday, right? Monday onwards, the premium was like, for call option it was 50 something, put option it was 58 or 60 something like that. the price didn't breach this support, price didn't reach this resistance as well. It roamed. On this day, guess what happened? This went to 0 rupees. This also went to 0 rupees. From 60 to 0, 0 in the sense it is 0.5 paisa, it's a 5 paisa at the end. From 60 to 0.5 paisa, you will have like 59 points of Bank Nifty on one leg. You had another 50 points on. So combined together you had a total of 100 odd points from Bank Nifty selling itself. See, one thing, you are taking two legs together, one on this side, one on this side. Now suppose you have this move, obviously your put option value is increasing, but at the same time this call option value gets substantial reduction. Why I am saying this is because when your expiry is near, the value on the opposite spectrum simply gets trashed down. See, you might have done this. You might have bought an option, a buying option, call option or put option, but the price didn't move anywhere. Sometimes market went up. Sometimes market went up and your put option didn't perform what it had to be done if you had bought futures, right? You might have thought about this, and price does this at times. Extension, pullback. So every extension there will be slight amount or slight increase in your premium, and every pullback your premium just gets down. This is a problem with option on, as it contains a time decay factor. Especially weekly expiry, the decay is huge. From Monday onwards, any move, if it is going down, your call option is going to be substantially reduced. If the price is going up, your put option is going to be substantially reduced. And here what happened was the put option value rose around to, I don't know, I think 72 or 75 points, something like that. From here put option started to degrade its value. From 77 it came back to where it started, 55, 52 odd points. But imagine this call from 50 something points, it came down to 38. Even with this slight increase in put option, call option didn't perform well. Only 2 rupees or 3 rupees it increased. And here it was a doji non-performer for, I mean, such dojis are the best places. If you have a doji on that day and you have the position, you would have made money, boss. You would have made money, madam as well, right? Madam and boss, you would have made money. How so? Now imagine this is your current price. You sold here at 325. Just square off the position. How much points you will get? Let me tell you. This deducted from 55 to 38 and rose back to some 42 points. This came down to 77. Okay. Let me give you example. Call option, you sold around 53 odd some point. Put option, you sold around 58 option. Now this was around 9 morning, around below 9:30, whatever say. At 3:15 p.m. this call options value, wait a sec, let me just add how much it is, 111. Okay, combined together the total points that you carry is 111 points, and this call options value just reduced some like to 42 or something, and put option was around 55. It didn't do anything much. Now how much is this? 97. What is the difference? You had 14 points, and if you multiply 14 by 50, it's 560 rupees just one day. Now this is based on selling one lot on both end. Okay, now let me tell you, sellers usually don't do one lot. Okay, sellers does this with huge quantity, even though selling an option requires capital similar to future, but for doing intraday there are some brokers who allow you margin on selling bank nifty options. Just google them as well. Okay, you will get tons of, I mean, at least in my opinion, you have like 3 or 4 brokers who can give you one bank nifty option selling for 5000 rupee per lot. Okay, for 5000 rupee you can sell it for one lot. Okay, if you are taking call and put, it means 10,000. On expiry day it even gets reduced to 2500 to 3000 rupee per lot. Now if you have a capital of 1 lakh, say 1 lakh rupees, let's say you are risking, let's say you are taking 80,000 capital, and that divided by 80,000 divided by 5,000, that is 16, meaning 8 lots you can take each sides. Now this is combined 560 considering 8 lots, so that would be 560 multiplied by 8 lots, that comes around 4,480 rupees if you are opening an account with such and such brokers who give high leverage. Okay, now you can do this on everyday basis from Monday to Thursday, and Thursday is your jackpot day. You cannot carry forward with the margin if you are taking up leverage, but what you can do is, if you are carry forwarding, you need around 60,000 per lot. That part, if you have, say, if you have the capital, you can do it. But let me tell you, this was for one day, and next day it even reduced for this. Sorry, let me just take this off to somewhere over here. I don't know the actual value, but what happened next was, it's a doji day. What happened over here, it's a doji day, right? So on doji day the price didn't move anywhere, meaning it did some 45 odd, something like that, at, sorry, I'm not taking the open, 45 odd something over here. No, it's not 40, it's around 40 or something. This reduced somewhat around 248 something, and at the end you had value of 88 something. Okay, and on Wednesday you had this move to upside. And now let me tell you, your call option from 40 it went till 70 something point. The high was made around 70, then by end of day it came around 65. But the thing is, your put just got reduced by very half. If I'm remembering correct, it came around 30 or 32 points. Now I am adding both the values. It's 97 again. And what happened here, you had the expiry day, and on expiry day what the specialty was, see, this was 65, I'm sorry, this was not 32, I think this was 16 or something. Okay, next day you had a gap up, you see this little gap up. On this gap up, what do you expect? Call option will have little bit increase, put option will drastically reduce, and that happened over here. During opening itself it came to 8 rupees or 4 rupees around, so by the end of day it came down to 0.5 paise, and this also came down to 0.5 paise. All right. From 111, if you are carry forwarding, I'm saying, okay, from 111 you are down to 10 paise. Now what is the difference? This is your difference. And how much profit per leg? 4,400 if you are doing for one lot. Now for this you don't have to carry the tension and all. Okay, at the end of day, just look, weekly 4,000 and you have 4 weeks, say around 10 to 15,000 per lot is good money, right? Monthly per lot, I'm saying per lot. And sellers usually don't do in per lot basis, okay? They do multiple lots. Sellers are the hedge guys, they do hedging a lot. Even we are also doing a little bit of hedge. It's not exact hedge, you're taking both legs here. This apparently was your jackpot because on expiry it didn't cross this nor this. Now if you are having more guts, you can switch to 15-minute time frame. This was your expiry. All right, what you can do is, even you can take this and take the sell the put option around 26,400, sell the put option around 26,600. This will have even higher premium. The closer you get to price, you get a higher premium, which means more premium, and if it turns to zero, definitely you will earn more money. Now this is what you should do. But to begin with, plot on daily, okay, watch it. It's, you don't need to pay money to watch it, okay? Now even still the price is within this range, just expect or consider this. I'm taking 26,800 for call option sell and how much, 26,000 for put option. Let's see what is the value for this one. 26,000 is around over here, and you have around where 26. Let me check what is the value. Let me check what is the value. Sorry, 26,800, right? So 26,800 over here and 26,000 over here. Now you are gonna pick the put option. OTM means out of money, and call option OTM. This is what you should be trading. What is the bid price and ask price? Ask price is, sorry, you are going to bid, sorry, you are going to sell, right? So you need to look up on the bid. This is where you will be selling to. You will be selling at 46.85 and you will be selling at 23. So combined together it's like 70 odd points. So from 70 to 60 you get like 70 to 0, you get like around 2,800 to 3,000 rupees. All right. See, that is case in case if you are holding till expiry and price doesn't move anywhere, you will be having money. But you are going to be an intraday guy, you will be selling this in the morning itself. If there is a substantial move to some side, what you should do, then you will have to reevaluate. Don't worry, you won't end up in loss and all, because say you will be ending up in loss when, say, your market is going down. Obviously this 23 will become 33, 50, 76, 110, some value. At the same time, this 46 also will be getting reduced to this side, right? Like this 10, 6, right? Okay, so when market does that, what you should do is contain your loss by reanalyzing. don't worry, you will have a buffer. See, 23, even if it doubles its value, you will have a 46 odd points in your hand. But since it is Monday, the decrement of 46 will be slow. On Tuesday it will be a bit faster. On Wednesday it's going to drastically reduce. Okay, so when there is market moving downside, this 46 on a Wednesday, it will drastically reduce its value from 46 to 8 rupees possibly. See, every day it gets reduced. 46 will turn 40, 40 will turn 28, 28 will turn 11 rupees, 11 to 5 rupees, then 4 rupees, eventually 0. So you will, if you, that's the thing for position carrying. Okay, so 46 will become 0. You can carry it. Once your resistance is broken, what you should do, cut off this sell loss making position. Cut off. If this is increasing its value, cut off this one. Okay, and pick the next leg. Pick the next leg. When I say here price is coming down, your put option will be having trouble, so you need to cut this down, right? So in order to cut that down, what you should do is pick the put option over here, sell it. You will already have a call option over here that is being riding, right? What you should do is don't close it, let it stay open. What you should do is add another call option over here. Now because this is your new framework, right? So you will be selling a put option, you will be selling a call option. Price just broke down. Upon the next pullback, if you see weakness, meaning it has a potential to come down like this, right? So when it comes down above around this resistance zone, sell your call over here and sell your put over here. Let this position get to 0. This will eventually get to 0. Okay, don't worry about this position. You will have to worry only when price does this, right? But by that time your Thursday would have come and it should go to 0, because this is the biggest Bank Nifty fall, right, from 2700 till 26300. See, Bank Nifty on a generic scenario doesn't do this on everyday basis. Where do you see such candles? Once in 3 or 4 months. You see over here, this is normal candle, this is a mega bull candle. Yeah, after 2 months you see this. This is before 2 months. This is budget day, so forget it. Now you see this is another one. Do you see any other big move candles? Yeah, this is some, I don't know, some bank moves, I don't know, could be some news flow. See, another mega bull. It hardly happens, but rest of the time Bank Nifty is like kini laddu jaisa jata hai. So just don't worry, this is how Bank Nifty will perform. All you need to do is just reanalyze. You won't end up in mega big loss and all. See, every day you can earn 500 to 1000 rupees just by selling options. I'm just saying, just by selling options you won't end up in loss, but rather earn at the minimum. If you say 200 rupee per day per 2 lots, I mean 1 leg call and 1 leg put, 200 to 1500 rupees you might earn. It's not a big deal. You have the possibility to earn. You can even do this starting from Friday itself, but on Friday the premium value can rise if market wants to move in any direction. It is a possibility, because after expiry market needs a new direction. So here over here market didn't do anything, and then on Friday also it is indecisive. So somewhere market wants to go, right? See, based upon this, I think market might take a turn. See, the weakness on the bulls are prevailing. Only fresh candle can give us an idea. As of now I am seeing test, it's all getting, bulls are getting weakened and bears are entering. Let's see how things pan out. Okay, this is the bonus content that you should be looking upon. Now for those beginners, for them also I need to give out some methodology. See, you might have come across on YouTube. If you see on YouTube, there are tons of trading strategy, right? Trading strategy, if you just type in, you will get tons of strategy. Earn 5,000 daily profit, 12 percentage. Now intraday strategy, how to select for intraday strategy. See, all these guys have their own perception, right? Now what is this? Rupees 4 lakh profit in a single day. Yeah, you can watch all this. You also might have come across this open is equal to low scenario, right? But if you have traded this part, open is equal to low and open is equal to high, when open is equal to low you should go for buy, and people say it is 98% accurate, but I don't believe this part, because it's a self-fulfilling prophecy. See, when open is equal to low, you give this to YouTube, this has 84,000 views. Obviously all these 84,000 views may not react to this. All these guys are wanting to make profit, right? All these guys are in need of money. They need money badly, right? So everybody wants money. What do we have here? RSI strategy, rupees 8,000 in less than 22 minutes. See, I agree all this. Many strategy work, but all of them, see, let me give you with an example of the same thing. People tell you, go to live market. Sorry, where is it? Equity stock, yeah, equity stock, and they would ask you to go to, sorry, where is top 10 gainers? Yeah, this one, top 10 gainers. This is what majority people ask you to do, right? Go to top gainers and losers. If Nifty is in green, go for buy. If Nifty is in red, go for losers, right? And at 9:30 maybe they will say, some guys at 9:45, some guys will say at exactly 10 o'clock you have to check this. People say, people have their own rules, they have created it. Yeah, some might work, some might not work. If you are a person who is watching this and feels that those things did not work, now it might give or make sense into your brain. How so? Let's see why. Let me pick F&O Securities, and BEL was the top gainer. Let us check the BEL chart. Why did it move up? It is in a mega downtrend so far, right? Let me move to monthly chart. What is happening on monthly chart? A series of bear candles. Let me check with Fib retracement. What happened over here? It is exactly coinciding with my 50%, right? So, and my monthly candle is a doji, sorry, a spinning top. Weekly, let's see. Yeah, see, this is the reason. The weekly candle is a shooting star. And do we have support? Oh, of course, why not? We have a support on weekly, so daily should also react with that part, and hence it just got reacted. Now what you would have done is, they would say how much for trade after the, this is 9:15, right? 9:15. See, at 9:15 this is the only candle that was made. This was made after odd some, how much, some after around 11:30. See, at 10 o'clock, what is a top gainer? I am not able to find. I'm sorry. Yet, you should know how this is working, right? Now you know the trend analysis and identification of strength. Projection, weaker, weaker, no projection, no projection, depth increase, depth increase, depth increase, support is getting taken. That is a reason, but definitely you have 200 odd stocks and future on option. You will never find a stock that will perform right tomorrow as a top gainer, right? Only see whatever they are saying. For example, let me pick a better option of Reliance. Yeah, Reliance had its annual meet. Obviously, many retailers would have traded it, and yeah, this is 11 o'clock candle. Many retailers got flushed out over here. Oh, poor boys. Anyhow, so what happened over here? Yeah, this is the first 15-minute candle that occurred. Second 15, third 15. People would say buy above this because after 9:45 or even 10 o'clock. Put it this way. Let's consider all the groups. This is 9:30 high. These guys would have made some money and it came back. And this is the 9:45 guys, and this is the 10 o'clock guys. So 10 o'clock guys would say, or 9:45 guys would say, buy above the high of this one. Obviously they got triggered. What happened? It was a trap. It didn't do its job. It came down. See, do you think at this point, once you take up a trade over here, when you see a negative return, do you think you will be a happy person all along over here? Oh shit, it is coming down. Fuck this strategy. It moves. What happened even at the end of day? Again, new set. There didn't do anything good, right? See, obviously, considering this from this to this, obviously it is a gainer at 10 o'clock zone. It is a gainer, right? It is a gainer. There is no doubt. This should reflect because the first candle itself exhibited the gaining part, and on the consecutive two candles, definitely at if you check at 10 o'clock, Reliance would be on top 5 gainers. It should come. But apparently, did you check the trend, people? Do you think you could buy above this? What is the trend suggesting you? This low was broken by our trend, right? What am I seeing over here? Isn't it a resistance part? See, obviously this resistance was broken by the first candle itself, but you can consider the doji as well over here as a resistance, and people are trying to buy right above this. Breakout traders fail 72% of the time. This is not how you do a breakout trading, guys. Now, what is this? Is it open is equal to low? I don't know. Let's check. Open is equal to low. Do we have any open low? Open low, open low. None of them exhibited open low. Oh yeah. Okay, Reliance is more or less open is equal to low only. See, open is 964.75, low is 964.50. It's hardly 25 paise. So we can consider it to be similar fashion. It is more or less open is equal to high. It's 25 paise difference, so it doesn't make any bad bull candle, because obviously it is a 25 paise variation of bears with bulls, right? So it is a bull winning candle, and open is equal to low criteria is also met, along with top gainer criteria is also met, but our chart or price didn't work in our favor. Instead, these guys ended up in loss at the end of day. That is not how you should trade, people. Beginners, those who are following YouTube, I don't mind it, but check with what you have learned as well. Okay, they also have strategy. Now let me show you this fellow. He is a good trader, smart trader. He has consistent profit on daily basis, but you are not this guy. His view is different, your eyes are different. And this guy, he might be a good trader. His eyes is different, your eyes are different. And I am a different person, and I am teaching you something. It doesn't mean that what I say is completely reaching upon your brain. I'm not sure about that. Only you can analyze that. Only when you print money on your account, then you will realize, okay, that is good. And I really wish you guys be perfect in that part. Okay, being disciplined is another factor, right? You can follow any of this, but everything will have support and resistance. Price travels here, price travels here. Whatever gainer happens or losing happens, it crossed a resistance or support, and that's how things work. This is your primary stuff, don't forget it. Okay, and yeah, now our next thing that I just would like to tell you is, see, on brokers there is this feature called high and low. I don't want to confuse you with that part. See, it is more or less this one only. Okay, top gainers and losers. Never mind, we can do that for some other day. If you need that part, I will mail you, if at all. Okay, mail me at backspace trading@gmail.com. So it's not big of a deal, but what you know is what you have learned from this course, and try to implement it. And kindly be a disciplined trader. Okay, don't just blindly follow the media. Never trust media hereafter. Only trust your eyes and your own chart. Your intuition is most important. If you feel the price has to go down, go with your judgment. Okay, it's not a big problem if you make a little loss. Your risk per trade is something that you have already predetermined, right? So in that case, or in that scenario, you know how much risk you are willing to take, and if it is lost, don't worry. The next trade that you generate will have a better clarity. Okay. Oh, look at that. This is something cute, right? Boom. Kiss. Price just kissed the zone and went up. Power of support and resistance, people. Okay, so that concludes our complete chapter on price action course from Backspace Trading Academy. I sincerely hope and wish you all the very best in terms of your trading account size. Okay, please try to deposit just 10,000 rupees on a separate broker. Okay, open any broker you like, I don't mind. Open any broker. Maybe go see if it is a full brokerage service or discount brokerage. It's up to you. You know, you are the best decision maker. You know how to do it. You know how to research it. You have joined this course with your own brain, so in that sense I know you will be able to identify which broker you are going to go. Now I have multiple brokers. Okay, I have, to name them, I can tell: Zerodha, Upstocks, Fire Security, Sharekhan, Asta Trade, and Deals Money. I have multiple accounts. Okay, I trade. I do my intraday trades on discount brokerage like Upstocks, Zerodha. I do my investments on full brokerage like Sharekhan. I do my Bank Nifty trading strategy on Asta Deals Money. Both these brokers give me lower, higher leverage. So that's how I segregate my trading account. And that being said, you are also welcome to open your own set of brokers. Try to open multiple accounts. It's hardly 400 rupee per year, right? It's not much. You see, you lose like 10,000 rupee per day, so paying 400 rupees is not a big deal, I guess, right? But hereafter you shouldn't lose 10,000 rupee blindly. Okay, never do that. Suppose if your trading capital is 10 lakh, you are liable to lose 10,000 per day. I don't mind. But if your capital is only 10 lakh, then lose 10,000. That is 1%. You are supposed to lose 1%. It's not a problem. But when you trade and earn back, it should be 40,000 or 30,000 on a capital of 10 lakh. Now with 50,000, do you really think you should be risking 10,000 or 5,000 or 2,000? No, right? I would say hardly 500 to 800 rupee per trade you can risk, so that you get like 60 to 70 trades of total in case you are about to wipe off your account. So in order to risk 600 to 1000 rupee, what does that mean? I don't think you can trade futures or options. You can only stick with equity. For a 50,000 capital, I'm saying. If for a 1 lakh capital, I would say you can risk around 1000 rupee to 2000 rupee per trade. Now, you don't have to overdo stuffs. If you lose one day, just leave the terminal and leave it as such. You don't have to trade again. It is not mandatory to do trading every day. Every day you have to earn 500,000 rupee. It is not mandatory. Just give some rest. If you take a loss or a series of loss, say 5 loss in one day, I would say take rest for 1 week. As everyone says, market is not going anywhere, right? So take rest. Come back after a week. Do your analysis. Do a back testing. Okay, you keep a main account and a demo account, but both accounts should have money. On your demo account, I would suggest keep 10,000. There is this concept called paper trading. Let me tell you, for paper trading, definitely you will be earning money every day on your papers. Okay, but when it comes to the real trading account, most of the people, 90% of the people lose money. And on paper trade, those 90% set of people just earn money on their paper trading. So that is why I'm saying don't paper trade. That's such a waste of time. It gives you a mental satisfaction like, I earned money on my paper trade. Fuck it. Fuck the paper trade. It doesn't work. What it does is simply saturating your mindset that okay, you can earn money. It just gives you a confidence, but it doesn't give you a statistical edge on your analysis. When it comes to real money, real emotions get in. That's where you have your brain get brain making the real flow. It needs to have the fear. The brain needs to have the fear of entering market, exiting, the loss. All those has to be accounted with your own money. So that's why I'm saying deposit 10,000. With 10,000 do your trading. If not 10,000, deposit 5,000. If that is not possible, go for 1,000 rupees. I don't mind. Or even 500 rupees. No problem. But some amount. See, for 500 definitely you won't get that fear. I would say you would think only as a hardly 500 rupees. So who bothers, right? So at least deposit 10,000, because when the amount is something like that, 10,000, losing 10,000 makes you feel bad, right? That's why I'm picking the number 10,000. See, obviously, only from mistakes you will learn. That is never ending process. I have done tons of mistakes. Trust me, I have blown off accounts like five times in a row, people. It's a difficult journey. My path was like it was shithole. Let me tell you very frankly, it was shithole. I blew my account five times in a row. But later I started learning, studying, researching. It took me like 1.5 to 2 years just for research. Every forum, every site, every videos I started to watch. What I'm teaching you is a combination of everywhere that I gathered the knowledge from. Okay, I put everything together into one big buffet, lunch buffet. That's what I'm giving you now. The candlestick that the candlestick that you learned initially was from Steve Nissen's book. Okay, he is the father of candlestick. Then comes the evolution of the trend, uptrend, downtrend. Of course, these are the stuff that you would have already heard, you would have listened 1,000 times, but yet your brain didn't register all these stuff, right? Higher highs, higher lows, all these stuffs were there and were prevailing at everywhere, right? You must have heard tons of times. But through this course, I've been saying this for many times: uptrend, downtrend, support and resistance, higher high, higher lows, lower highs. I must have told you like 100 to 200 times by this end of course. Definitely this would have reached your brain now. See, that is the impact. Somebody has to, spoon feed something into your brain. Only then our human mind registers. We are not Albert Einstein or the high IQ guys above 150 range. We are only normal median people ranging from 70 IQ till 120. The middle guys, I mean this range of set of people, they require some procedure or some steps to be driven so that they can initiate. This set of people are the majority in the world. Okay, the mediocre people, that's what we say, the mediocre IQ guys, from ranging from 70 to 120. Those set of people, including me, okay, needs special special requirements, because we follow rules and regulations. We are not those heavy gut filled guys who can do extraordinary stuff, right? We are making laws because we are mediocre people. We need some motivation, we need some teaching, we need something to learn, we need some set of procedures, we need to know how, then we can do it. That's how we do, right? So that's what you've been doing so far, and that's excellent part. Thanks for having the patience so far, learning through this such a big course. I think around 12-13 hours of course. You spent an entire day just for this course. See, you've been looking around, listening to my voice. Thank you for that, and thank you for trusting this course and taking up this part. And I really wish you a successful trading scenario in your trading account. I really hope you bring money into your account for your family and for yourself. Remember the first chapter, money brings you happiness when you are in a stock market scenario, right? So when money flows in, definitely you will be happy, you will be respectful yourself, you will be respected among your own community. See, when you say you are a stock trader, you will have that proud image to others, because the opposite guy listening to you will be like, oh shit, he is a big guy, like a Wolf of Wall Street guy. So So they have a tendency to think like that. So you need to be a successful trader to earn money. And that concludes our course. And once again, thank you for bearing with me and taking up this course. All right, thank you so much, and all the very best to you guys. Okay, see you, ladies and gentlemen. Bye.